And your next guest is likely not all in on Bitmine. In fact, he's got a $6,400 price target on the S&P 500, which, as you might notice, is exactly where the market is right now. So is the rest of the year dead money? Let's find out. Scott Wren, Senior Global Market Strategist at Wells Fargo Investment Institute. Scott, good to have you back on. Don't worry, I'm not going to ask you about Bitmine. Everybody else is talking about it, so we won't. But I will ask you about your
I could not talk about Bitmine, Brian.
Even if you could, I'm not sure that I would ask you
about it.
Even
if I had an opinion.
But I will ask you about the S&P 500. 6,400 is pretty much where we are right now. So does the rest of the year just go sideways?
Well, I tell you, I think we're going to have some volatility. And really, Brian, for us, and we've tried to be patient here, if we look back over the last 12 or 18 months, we're buying stocks on pullbacks, and we're leaning towards stocks. We took advantage of the pullback we had in April. And I would say that, when you think about tariff uncertainty, I mean, you can just think about the announcement over the weekend or today with the two chip companies. Inflation's creeping a little bit higher, growth slowing down. So I think there's some uncertainties out there that will give us an opportunity to buy stocks, not dramatically lower than where they are right now, but lower than where they are right now. So if we get that opportunity, we're certainly going to try to take advantage of it. But we're trimming a little bit in a couple of sectors.
Okay, would then say like a 7 to 10% pullback not only be welcome, but healthy?
I would say it would be. I mean, really, Brian, when you look back over the long history of the S&P 500, you have a 10% pullback on average about every 10 and a half months. So they happen. Retail investors certainly get nervous about it. But the thing you want to do is, if your time frame's 2 years, 3 years, 5 years plus, is when stocks are down, you want to buy them. And, optimally, the best times are when stocks are down as much as they were in April. I don't think that's going to happen again today. But, if we saw a 5 to 10%, 7 to 10% pullback, I think that would be pretty reasonable after the run we've had.
Earnings have been pretty solid, particularly among big cap tech, which I do wonder, as part of me wonders, Scott, is big cap tech the only thing that matters right now? You can comment on that if you'd like. But have you been happy with the earnings numbers that you have seen?
Well, I tell you, for the second quarter in a row, it was about double expectations. So, I mean, certainly this reporting season was very good. I think you're going to see a noticeable slowdown in the third and fourth quarter earnings. Big cap tech has been really driving the bus, and tech-like. So if you look at communication services, where we're trimming a little money from there, they had, far and away the best earnings growth rate year over year. Tech was in there. Financials were in there. We're overweight both those sectors, or we like both those sectors. So I think that, big tech and big tech-like companies, they're going to continue to do well. They're going to continue to have nice revenues and cash flows. So, over the course of time, they're going to go higher, I think, but communication services, as I mentioned, that's one of the sectors where we're trimming a little money, put back into financials, which has trailed a little bit over the last 3 months, but we like.
Well, we're still not out of the woods with tariffs. We've still got some concern about all the AI spending that maybe it may not all come to pass because companies simply won't be able to execute on it. In the next block, we're going to talk about President Trump meeting with Vladimir Putin. There are always risks to the market, Scott, but if you had to, some of the things I just listed or more, what would be the bigger market worries right now?
I think, Brian, the things that are going to give us the opportunities, the worries that are going to give us opportunities, I think, is the level and length of tariff implementation. But the thing we're going to see first, I think, is inflation creeping up a little bit. We're going to see the labor market weaken, and we're going to see growth slow down. So I think the tariffs might take a little bit longer to play out, even though in this next earnings season, we're going to hear more and more about it. We heard about it a little bit in the second quarter reporting season, but we're going to hear more in the third. But I think inflation, growth fears, labor market fears, those are the things that are going to worry investors, that are going to provide, hopefully, the opportunity to buy a little bit lower.